Hi, I'm estate planning attorney Paul Rabelais, and in this video, I'm going to address the new 2023 rules regarding how much you can donate to others each year without tax consequences, and how much of your estate you can leave to your heirs when you pass away, free of the 40% federal estate tax. So it's that time of year when the IRS announces its tax rates and annual inflation adjustments for the upcoming year, including how much you can donate to others each year without using any of your estate tax exclusion amount, and how much of your estate you can protect through the use of your estate tax exclusion amount. First, let's go over how much you can donate to your children or others each year without incurring any gift or estate tax consequences. In 2022, you could donate $16,000 to as many different people as you want without having to report the gift on a federal gift tax return, also known as IRS Form 709. That annual exclusion amount number is subject to being increased each year due to an inflation adjustment, but it can only go up in increments of $1,000. So for 2023, this annual exclusion amount was increased from $16,000 to $17,000. So what does this mean? Well, starting on January 1st, 2023, you can donate $17,000 to as many people as you want without being required to file a federal gift tax return. And generally speaking, if you're married, you and your spouse can donate $34,000, $17,000 from you and $17,000 from your spouse without having to file a gift tax return. Note that if you do transfer or donate more than $17,000 to any one person in 2023, you will be required to file a federal gift tax return and report that the gift was made, but neither you nor the person you made the gift to will be required to pay tax. By making a gift in 2023 in excess of $17,000, you will be merely using some of your estate tax exclusion amount, which you can use during your lifetime by making gifts in excess of $17,000, or you can use your estate tax exclusion amount when you pass away. In a moment, I'll explain how the estate tax exclusion amount has changed for 2023. But let me dispel some myths about the new $17,000 annual exclusion. First, if you make a gift larger than $17,000, no one owes any income tax. Some people inaccurately believe that if a gift of more than $17,000 is made in 2023, that someone, either the donor or the donee recipient, must pay income tax. But that is just not true. The only time someone owes tax on a gift is when someone makes a gift that is so large that they use both the $17,000 annual exclusion amount and the $12.92 million estate tax exclusion amount, which is rare. If a donor made a $20 million gift in 1 year, very rare, they would have used more than their $17,000 gift tax exclusion amount and their $12.92 million lifetime exclusion amount. So gift tax would be owed. Second, there is no limit as to how many people you can give $17,000 to in 2023. If you are married and you have 5 children and 25 grandchildren, you and your spouse could, if you wanted, give $34,000 to 30 different people. That's potentially removing $1,020,000 from your estate during your lifetime and avoiding the 40% tax on that had you left it in your estate. And note that you're not limited to giving only to family. You can make these gifts to as many people as you want, whether they are related to you or not. Next, let's discuss the federal estate tax exclusion amount. For people who pass away during the calendar year 2023, the basic exclusion amount is increased from the 2022 exemption amount of $12.06 million to the new 2023 exclusion amount of $12,920,000. This is a big number for most Americans to fathom, but it gets even bigger if you are married. If you are married, each of you and your spouse have an exemption of $12.92 million. So between the two of you, if you set up your estate correctly and your estate gets handled correctly when you pass away, you can leave $25.84 million to your heirs free of the 40% federal estate tax. So let's summarize it here. For the calendar year 2023, you can give or donate $17,000 to as many people as you want without being required to file a gift tax return and without using any of your basic exclusion amount. Again, if you're married, since each of you can donate, you and your spouse can donate $34,000 to as many people as you want without gift tax consequences. And then on top of that, when you pass away, you'll have an estate tax basic exclusion amount of $12.92 million to protect the rest of your estate from the 40% estate tax. Now, a few observations. First, this exclusion amount is a big number, and many of you watching this may never have to be concerned with this. But if you're well off, or if you're going to be well-to-do in the future, you should be aware of this. In fact, some of you may be wondering, why is this exclusion amount figure so large that it affects only the wealthiest Americans? Why isn't there more political pressure to reduce the exclusion amount and thus increase tax revenue? Well, the exclusion amount effective January 1st of 2026 is set to be cut in half, perhaps to around $7 million after you factor in the inflation adjustments. So I suppose the political powers at be right now are not pushing to reduce the exclusion amount now when they know it will automatically be cut in half on January 1st, 2026. And speaking of 2026, let's talk clawback. People ask, if someone makes a large gift and uses their $12.92 million exclusion amount during their lifetime, and then the exclusion amount gets reduced to, say, $7 million, will the IRS attempt to claw back that large gift and require gift or estate taxes to be paid on the amount that exceeds the new reduced exclusion amount? Well, the answer certainly appears to be no. The IRS released regulations that allows a deceased person's estate to calculate their estate tax credits either in the year of the gift or the exemption available at the year of death. This allows individuals to make full use of their $12.92 million of gift exemption currently without negative gift or estate tax consequence if the individual dies during or after 2026. Next, a couple of exceptions to the rule that you must file a gift tax return if you make a gift to someone in excess of $17,000 in 2023. One, regarding charities, you can make unlimited gifts to charities without it having any gift tax consequences. And you can leave an unlimited amount of your estate to charities when you pass away without any estate tax consequence. So the super duper wealthy can avoid the 40% estate tax entirely by giving or leaving their estates to charity. Two, spouses can make unlimited gifts to each other without incurring any requirement to report the gift or file a gift tax return. And finally, I'm going to mention the income tax rules as it relates to the gift tax and estate tax. No one pays income tax when a gift is made, neither the person who receives the gift or the person who made the gift, regardless of the size of the gift. Gifts in excess of the $17,000 annual exclusion amount are reported on a gift tax return, which is a completely separate tax return from the Form 1040 income tax return. And also worth noting again that the person making the gift, regardless of the size of the gift, does not get to deduct this gift from their taxable income as reported on their income tax return. The income tax and the gift and estate tax are two completely different forms of taxation. So I hope that clears things up for you in 2023. Make sure you like, comment, and subscribe. And to find out more about using our law firm, America's Estate Planning Lawyers, to create your customized will or trust-based estate legal plan, click the links in the description below. Have a great day.